Welcome to this video. It's now the beginning of July. The first half of the year has passed, and we're going to have an outlook of the second half of the year in the markets. We are right now around 6% year to date. If we look year to date, it's up 6% and it's all-time highs. And everyone is like really optimistic, like let's go, the economy is booming. We can even see in the news that like here, for example, economy adds 147,000 jobs, defying expectations of a slowdown. Here in this article, cross currents abound for stocks, but history shows the bull run has further to go, says this analyst. So everyone is optimistic. So the funny thing is that a few months ago, here in April, the news was like super negative. For example, here we can read that this like Trump is fighting a trade war he can't win. The stock market is the loser. But this was the exact bottom actually. So if we look back, I made a video about how these tariffs are not going to impact these massive companies like the Magnificent Seven, Google, Apple, Microsoft, Nvidia, etc. They're not going to affect these companies too much with tariffs. And I explained that in America it's still a consumer paradise and that they still have to pay less for products than people from Europe, for example, because of value-added tax, which they have little of in the United States. So I was explaining that this is not going to affect, it's just the news and fear, and that created panic selling. And this has always happened in history and will happen in the future too. And some people, and you should take advantage of this kind of fear setting. But the question for today is, because we cannot go back in time, the market is now all-time highs. Is it going to continue to push up or is it going to collapse? Let's find out on this video. We are now looking at seasonality of the S&P 500, which basically means is what's the average return each month. And that gives us a probability and a statistical edge on what to expect for the month. So we can see here in July, it starts here and then here. This is the average movement of July, which is a positive of 2.5%. So this means that this month will be bullish based on these statistics. This article says that S&P 500 July returns from 1957 to 2024, and we are now up 10 years in a row, which means the last 10 years, every year was bullish in July. So the probability that this year will be bullish is pretty high based on statistics. And if we can see here, we go back to the charts, we can see August is pretty neutral at 0%, and then September is generally negative, and then the last 3 months are going to be bullish, historically speaking. The S&P 500 PE ratio, or price to earnings ratio, is a measure that compares the current market price of the S&P 500 stocks to their earnings per share. So current market price of S&P 500 stocks divided by their earnings per share, which gives a ratio which investors use to to find the value of the whole market, whether it's cheap or expensive. Are we in a bubble or not? So we can see here that the PE ratio is right now 28.93, and it's at the upper band of the 1 standard deviation line. So it's not cheap, it's more on the expensive side than on the cheap side, but it's not really like a bubble territory. It's not. So if it gets out of this rectangle, like 35, 40, 40, then you have to be more careful. But for now, based on PE ratio, you should stay invested in the market. What are the Magnificent Seven stocks? The Magnificent Seven are the most dominant and influential technology companies in the US stock market. Here we have a list of the 7 companies, which is Nvidia, Microsoft, Apple, Amazon, Alphabet, which is Google, Meta Platforms, and Tesla. These companies altogether make up for more than 30% of the whole S&P 500, so 30% of the market. So the performance of these 7 stocks will influence the market a lot. So let's look at these companies individually. So let's look first at Nvidia. Nvidia is right now, I think, the largest company at $3.89 trillion market cap. And they are focusing on making video cards and dedicated software to help these video cards and software work together and sell to other large companies who are working with AI. And Nvidia is one of the most popular and best performing stocks in the last few years. And it's now all-time highs after this tariff collapse panic. It went up again 80%. And year to date, it's let's see, it's up 13-14%, which is pretty good. I think right now it's around fair value. Let's look at Microsoft. Microsoft performed also really well. From the bottom to the top, it's like 45%, massive increase. If we look here at weekly candles, we can see that Microsoft actually, it's super rare that Microsoft on the weekly candles go below the 200 simple moving average. So here you needed to buy. This was like a good time to buy. And now I think Microsoft is a little bit overvalued, but they own like 50% of OpenAI, which is pretty good. And they make a lot of money through licensing their software to companies large and small. Apple, who's making the majority of their revenue through phone sales, is now trading at $213. And yeah, it didn't perform too well, actually, to be honest. And I think it's also not really cheap. I think Apple's still a bit expensive and the trend looks still negative, but it's still one of the largest companies in the world. And they have a strong economic moat and brand loyalty from customers. But they try to switch more to the software side. If we look at Amazon, it's also a strong uptrend. We look at daily candles now, above the 200 simple moving average, looking very bullish. Amazon is a very predictable stock. They make money through e-commerce, and their Amazon Web Service, which is very popular and one of the best in the world. And yeah, so this is also looking good. It doesn't look too overvalued. And now we're looking at Google, which is one of the most undervalued stocks out there. And it's looking at a strong above the 200 simple move average, higher lows and higher highs. So I expect this stock really to expand more, like to go to at least 220 or something. And then we have Meta, which is in a similar sector, financial sector as Google, and they make money also through ads and using personal information to optimize ads for companies. I don't invest in this stock, but apparently they make a lot of money and they have performed really well in the last few years. And then lastly is Tesla, which is in a completely different sector, which is they make electric cars. But they also like a kind of a software company, and they really are trying to develop the AI well for self-driving cars, which they have right now. But there is a lot of competition, and there are more companies who can do self-driving cars and that kind of stuff. But I think this stock is also a little bit overvalued. But there's also a lot of potential upside with Tesla, and it has been in a sideways trend for many years. If we look out, zoom out a lot, so this can also explode higher. So overall, my conclusion with all these companies is that everything looks very bullish and positive and optimistic right now. The trend seems to be up on the most of these companies, but they're not like super cheap. So definitely no reason to sell or get out at the moment. I think staying invested will be the right decision. So the big question is, are we going to go even higher, or is the market going to correct? Well, I will give my prediction based on what we talked about seasonality, about the current PE ratio, the strength of the market, the economy, and the strength of the Magnificent Seven companies, like who has more than 30% of the weight of the S&P 500. And so based on what we talked about, I believe that it's now at the beginning of July here. And I think that we will continue to rally up in the next few weeks, like till August, like something like here. And then I will think there will be a small collapse and even more collapse. And then we will go even higher. And then we can reach maybe $700 at the end of the year, because the last 3 months are usually very bullish. So yeah, I think we'll continue to climb higher, then small correction, and then we go up. That's usually how these patterns evolve over time. We had here a 20% crash, so I don't believe that there will be a bear market anytime soon anymore. But let's see. Let's hope the best for the market, and see you in the next video. Don't forget to subscribe if you want to see more videos.